So if you are new to my channel, my name is Yasin and I create these videos to cover topics like macroeconomics, financial literacy, technical sales, as well as real estate investing in Canada. So if you are interested in any of those topics, please don't forget to subscribe because I will keep publishing the videos through this channel every week and you can thank me later for this content. In this video, we are going to cover how the bank run that we used to see in the history is very much similar to the inflationary times that we are living today, right? The end result for an average Joe and Jain in the economy is exactly the same because we are losing our purchasing power every single day in these rising inflation times. So in order to understand the relationship between bank run and the inflation times, we have to go back into the history and imagine that we are living in a times where we only use physical gold coins to purchase goods and services in the economy, right? The money supply is static. There is not much gold coins being created, so we only have limited amount of gold coins in circulation in order to purchase goods and services. Fast forward to the banking system history, where then suddenly the bank is created and the banker said, hey, you don't have to carry these gold coins along with you. You can deposit those gold coins in my vault, and in return I can give you this green slip, this banknote or a certificate, whatever you call them, and you can use this to redeem your claim in order to get gold coins back anytime from my banking vault. This has created the banknote process that is being circulated in the economy, and again the money supply is not increased because the banknotes and the gold coins have one-to-one relationship to this point. Now soon after that, the banks realized that not many people are coming to claim their gold coins back and they have gold coins left in the vault, so they decided to lend those extra gold coins into the economy to the borrowers to make some extra profit. Now what happened here is they issued loan through the existing reserve accounts into the economy, and they also started creating those new banknotes or certificate that the other people can also make a claim towards the gold coins that is being deposited at the first place into those banking vaults. So what happened here is the bank has increased the money supply. So initially we had one-to-one mapping between the banknotes and the gold coins. Now that one-to-one mapping has changed to 2:1 and maybe 3:1 as the process goes forward and repeats itself. So this has created the fractional reserve theory in the banking system, where they start collecting deposit from the depositor and then start lending some portion of it into the economy, and that cycle repeats itself. Now this process can go on as long as people don't realize that there is not much enough gold sitting in the vault to back up the claims that the people have been using those green slips or banknotes or whatever you call them in order to make the claim. Basically that green slip is nothing but a promise from the bank to the consumer that I owe you. So whenever you want to make a claim to get your gold coins back, I will make sure I will return those coins to you. Now imagine if everybody realized that there is a Ponzi scheme and not much gold coins left in the vault to back up the claims from the depositor, then everybody will run to the bank and start claiming their gold coins back. In this case, what happened is people who react immediately may get the exact amount of golds back from their vault, but the people who react later or late, they may not get enough gold coins to back up their promise that was initially put together by the banking system to the consumer. Now understand what happened here. The purchasing power that was initially set up has been decreased significantly. So the type of people may got their purchasing power back because they reacted immediately, and the people who reacted late don't get their gold coins back, hence their purchasing power is reduced. So now they have less amount of gold coins that they can use to purchase goods and services in the economy, so their purchasing power has been reduced as a result of increased monetary expansion in the economy. Now compare this with the today's time in the economy, where the banknotes or the green slips or the certificates are actually the fiat currency in the economy, where the banks, like central banks, are keep printing and pumping into the real economy, increasing the monetary expansion significantly. And compare the gold coins that were saved in the banking vaults to the real goods and services in the economy. So in today's economy, the banks are creating or printing the money supply, right, exponentially, but in return, the real goods and services in the economy, like cars, like groceries, like real estate, like any type of consumer product that is out there, it's not being produced at a rate of what while printing money in comparison to. So the amount of goods and services are same, but there is a huge amount of currency being circulated to chase the same amount of goods and services in the economy. So what will happen here is, so the purchasing power for an average Joe and Jain will continue to lose because there is so much money out in the economy, but there is not much goods and services to back it up in order to claim their purchasing power of what they have been promised by the banking system. Now you compare both scenarios and you see the comparison is very similar. Back in those days when the bank run happened, people actually lose their purchasing power. They get less amount of gold coins to purchase the goods and services in the economy. In the current economic times, we are also losing the purchasing power because the banks are keep printing money, increasing the money supply in the economy, and the amount of goods and services that we have to purchase are getting expensive every single day. As we are seeing, the real estate is getting through the roof. The car prices, the gasoline, the grocery bills, the electricity consumption, everything is getting expensive as a result of increased monetary expansion, as well the global supply chain disruption as well. But global supply chain disruptions are temporary, but the money supply is going to be permanent. So understand that. My analogy about people who reacted fast versus people who reacted slower. So the people who reacted fast may somehow retain their purchasing power because they immediately realize what's happening and they spend that money, almost immediately convert that purchasing power into something tangible, whether this is gold, whether this is real estate, whether this is cryptocurrency, or anything that they can hold as their wealth in terms of asset that can appreciate or at least hold its purchasing power over time, versus the type of people who are still hanging on the fiat currency, thinking that this is their wealth, not realizing that paper currency is keep losing its power and they are losing purchasing power every single day. So you have to realize whether you are the kind of people who are reacting immediately and converting your purchasing power into something tangible, or you are the late mover, keep looking at your fiat currency thinking that this is the wealth that is going to hold purchasing power, but in reality it's not. It's losing its purchasing power every single day, and you will be on the losing side as the time goes by. This is the exact reason why people are keep paying more and more to acquire assets. Real estate market in Canada is a perfect example for that. Everybody's scratching their head and thinking, why the hell people are paying $100,000 or $200,000 over asking to acquire a property in GTA or even outside GTA? It doesn't really make sense. It's too expensive. But when we compare this inflationary scenario versus the bank run, now we realize the mentality or the psychology of those people who were just reacting immediately and converting their fiat currency into some asset that can hold the purchasing power, if not increasing it. So now it makes sense why people are so aggressive in terms of outbidding everybody and trying to purchase and convert their fiat currency into a tangible asset. Maybe that's the best explanation I can give you on why the real estate market is so frothy in Canada. I think it's the big real estate bubble in the world right now. But similar to Canada, we have Australia, have the similar situation, UK, US, and I think the fundamental reason is because people are losing, or they are in fear of losing the purchasing power because they're seeing what's happening in front of their eyes by these central bankers. They are debasing the currency, and they know that the currency is basically stealing their purchasing power every single day. And as a result of that, they are actually converting that currency into something that can hold its value over time. So I don't know if it's right or not, but that's the human psychology that we are seeing, and human psychology is is how people actually react and move and make those decisions with regards to their fear and their forward thinking. So understand that this phenomena, this is happening in front of our eyes. You have to protect yourself, your financial well-being, invest wisely, convert your fiat currency into something tangible like gold, like Bitcoin, like real estate, or anything that you think is going to hold the purchasing power for you. You make your decision wisely and help others to understand the difference between inflation and the money supply that is being happening in front of our eyes. So if you like this video, give me a thumbs up and hit subscribe button so that you don't miss any future videos like this, and I will see you in my next video. Take care.